Right, guys, welcome back. And what's going on today in DeFi? That is what we're going to look at. Today in the agenda, we're going to look at the CeFi system crash. That's what we're going to discuss. We're going to boost your decentralized financial knowledge stacks, and we're going to look at some core DeFi protocol statistics. Thank you for all your comments on my previous videos. I really appreciate it, guys. So please subscribe down below to the Ivan on Tech channel, like this video, and leave a comment down below if you want me to discuss any other protocols, any other topics that you want me to get into. I do want to have a short message on the previous video on the exit strategy with DeFi Capital. I will publish a more in-depth and more long targeted video where we can explore all the different statistics more in depth, because that just takes, I cannot just do that in 10 minutes. So this 10 minutes was more like, guys, take some profits, as I said, but I will go deeper into this in a separate, probably much longer video than this one. But let's get into the topics of today, guys. We saw yesterday, it was a very interesting moment. Like yesterday when I basically landed back in Amsterdam, I suddenly saw there was some outages at, a couple of Federal Reserve systems. We saw many systems that have that basically crashed down, that are basically, that basically rug pulled, CeFi got rug pulled basically. And this is very interesting to see, and this makes it important for us to start and try to understand this new decentralized financial system and hedge ourselves against a failing centralized financial system. And that's what we're going to look at more in depth today. If you want to find more information about what happened yesterday to the Federal Reserve and how they got wrecked, I recommend you to check out the links below to find more in-depth information on this. It's important for us to understand what we're dealing with here, right? So if we look into decentralized finance, we know what it is, and it's important to look at centralized finance. So what is the difference between the two, and how do we categorize them, right? So in a centralized financial system, if you have any argument with anybody about this, or if you want to understand this better, I would formulate it as the following. In a centralized financial system, there's no cryptographic guaranteed immutability of the transactions. In a decentralized zero trust, important, I come back to this topic below, their execution of the critical logic is secure as it happens. And another part that is really important that we see in DeFi is that there's no gatekeepers between the builders and the ideas that we're working on, right? So basically what happens is that in CeFi or in FinTech, we have bureaucracy, but we also have trust-based software, right? It's not open source. In DeFi, we're working with zero trust, trust minimized software, but just a little bit of bureaucracy layer, which is basically captured by a DAO, right? So in my opinion, this is a new system that we need to strive for, fight for, and that we as a population need to implement. And the focal point is in this case not performance, but mostly trust, right? So it's why do we use DeFi? Because we can trust these transactions. We in the Federal Reserve Bank, if we send money to each other, basically what happens, as we saw yesterday, it basically, at some point, as we saw, it crashes, and then you cannot access your money anymore. In a decentralized zero trust system, you basically always have the keys to your own money, and the system has a higher uptime than the centralized financial system. So that's an amazing factor to keep into account, and also to use when you're speaking to people outside of the space, or you want to explain what's going on. And basically what is happening, I will move myself so you can see this cool illustration here. So basically what's happening is that DeFi is a reaction to a failure in the traditional finance to move fast and agile. The current financial system is increasingly inefficient and opaque. Worst, a walled garden and a monopoly has been created in the current financial landscape, so it's hard to compete and innovate. And DeFi, it's open. We can all start building financial systems, financial services, right? So that's why it's broken, and it's just moving not as fast as the private sector as we can move it today. So for you to work in the space, it's very important to build on your decentralized financial knowledge stack. So most of this innovation is happening on the Ethereum blockchain of this point, but of course there's other financial systems that are created. But importantly, again, decentralization and zero trust. We cannot have any central parties, else we're just creating the same system with a different sauce. That's not what we want, right? So let's take a look. What is DeFi actually built of, and what kind of layers do we need to focus on? This is from an investment's point of view, and also from a builder's point of view. So if you're a passionate builder, if you're a developer, if you are a investor, this information is very important for you to understand, right? Okay. So if we look at the information that we see upon us, right, we can see that we always have a base settlement layer. In this case, in this illustration, I use Ethereum because that is at this moment where most of the DeFi action is happening, and it's also, in my opinion, the most zero trusted layer. Will we have multiple other layers where DeFi system will emerge on? Yes, and we're going to already see that. And how does this happen? Well, the first step is that we need to have a decentralized money market, right? So first we need to create a money market protocol, and we can see that here. On the protocol layer, we need to start creating different protocols that in turn then serve different financial applications. And then on top of that, we get aggregations where, different protocols make it easier for us to actually interact with all these complexer protocols. And that's how this new decentralized financial system is emerging on different blockchains at this point, right? So very important to understand, if you want to work in the space, try to see where you want to be most comfortable. Do you want to work on a settlement layer? Are you a core protocol developer? Then it's important for you to focus probably on the settlement layer. Are you a marketer or a business developer? Then start to focus on the application or aggregation layers, right? Are you maybe a little bit in between? You can start on the protocol layers to work on. So that's a cool thing to keep in the back of your mind. So as said to you guys before, let's look at how DeFi is evolving. Now on Ethereum, we can see that this is a very cool illustration. I hope this is clear for you guys. Yeah, we can basically see here that DeFi is started with, in this case, MakerDAO, and then Compound and Uniswap. They're very small in the beginning. And then basically in the end of 2019, beginning of 2020, a lot more people started to understand these layers. So basically what happened is that we built better application and aggregation layers. Thus, more people started to interact with it. So it was more accessible for more people. And we can compare this to the internet, right? So before we had a very small start of the internet here, back in the days. And then it was evolving throughout the United States and then throughout the whole world. And that's what we see here. And this is how the layers are stacked. And this is what we need to look for in different protocols. So if you look, for example, at Phantom or at Polkadot or at Solana, all these protocols, they will go to the same layers. So all these protocols will have to build the same layers, and you can invest in all these layers where you see that it makes sense for them, right? So let's look at the next slide. So we see now that the DeFi ecosystem will evolve on different chains and different layers, but it's very important to take into account that there is different trust levels, right? So it's like DeFi works on maybe a centralized server, but why it can then be attacked by states, nation states, or other actors, right? It's important for us to build on a zero trust layer where we have trustless issuance and trustless settlement, right? We don't want to work on state trusted layers like XRP or other layers, right? Or we don't want to work on legal trust or bearer trust. We really want to work on protocols that are active in this zero trust layer. If they don't fall under this category, I don't see a long-term DeFi ecosystem emerging on these chains, because at that point it will be manipulated or it will be shut down by different actors in the long run. So keep that in mind when investing, when spending your time, and when building. And also, DeFi is just getting started. Even though we are already here for building for this quite some time, but it's still very early. It's moving at a very, very fast pace, right? But we're still very, very, very early. And basically, over-collateralized loans, which a lot of people are using right now, is the hello world of programmable money. So keep this in mind. And there is much more newer applications to come. And this is especially happening on the Ethereum ecosystem. So what I see at Solana or at Phantom or other protocols, they are basically building mostly over-collateralized loans or derivatives products, etc. Where in Ethereum, they're already more trying to connect to real-world assets on the blockchain. They're already going to take the next step. So in this, let's see how that evolves further, and it's very, very excited. It's very exciting. So, this was a very quick overview to boost your decentralized financial knowledge stack. Now let's take a look at some core protocol statistics, right? So if we look at, for example, this MakerDAO report, which we can do right here, and I linked this in the description below, and it's really cool to see like these protocols are already making like financial reports. These protocols are already producing so much data, and they're getting much more mature at a very rapid pace. And I would like to recommend to you guys to take a look at this, to understand the data that we see in front of us, to understand the data that's represented throughout these protocols, right? It's important to understand that. I do want to make a side note here that in March we had Black Thursday in terms of MakerDAO. So what happened here, I reckon it's the whole other can of worms, but I recommend here to Google Black Thursday. Basically, there was the liquidity crunch where MakerDAO actually had some losses and almost collapsed, but they survived and they're making again profit. So you can see here it's a real anti-fragile system what we're building here, right? So look to that data and you will see what's going on here. What I find the most interesting, you can see here basically that if we look at the stablecoin transactions and the DAI deposits, MakerDAO in itself is already generating a lot of volume and also generates a lot of wealth for the whole token holders, because all the DAI that is being generated or all the DAI that is being used in these systems are all paying back a percentage to the MKR governance treasury. And MakerDAO, in the long run, will decentralize more and more and more, and you can actually be part of the decentralized votes that you want to make. You can be part of this decentralized ecosystem. You can vote on new proposals. You can work on even new coins. They're also looking to create a Euro DAI. So I want you guys to look into that and to become active in the MakerDAO ecosystem or in other ecosystems. And at this point, the core ecosystems for the DeFi ecosystem that we have today is MakerDAO, Curve, Yearn Finance, etc., etc. Also with DeFi Capital, we also have created a report why we invest in MakerDAO, and there we go much more in depth into all the different factors and all the different calculations why we see MakerDAO as a good capital asset and why we invest in it. And I recommend you guys to go to deficapital.com and you can download there the MakerDAO investment report, or you can see in the show note the MakerDAO financial presentation that I show you here. Right, so we also see this at Yearn Finance. Yearn Finance also publishes quarterly reports. Or if you go to Curve Finance, you can also see all the data. You can see there's more than $4 billion deposited, and we have a daily volume than almost $250 million as of today, which is literally insane and very, very exciting. All right, guys, so this was my DeFi News Bites of today, guys, and I want to close with a quote, right? So true stability results when presumed order and presumed disorder are imbalanced. A true, stable system expects the unexpected. It is prepared to be disrupted and waits to be transformed. And, you know, guys, like, DeFi is very early. We are in a very early stage. Let's all work together as one ecosystem. Let's bundle our research together, and let's make sure that we end up with a zero trusted layer, and that we have a financial system that doesn't go down like the current centralized financial system. All right, guys, I see you in the next video. Leave a like down below if you liked the video. Please subscribe to the channel and leave a comment if you have any more questions. Thank you, guys, and see you in the next video.